And yet the myth of gold as immutable money, right, or the sovereign store of value, it stayed with us for thousands of years into the 20th century. I would say that the gold standard has been dying a slow death, a death by 1,000 cuts. I think that, one thing that's pretty clear is that most people can't get their hands around Bitcoin because it's an utter paradigm shift. And why is it a paradigm shift? Well, because I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money either. And so economists and politicians and investors, they all lack the right mental model to understand Bitcoin, because science and engineering were so intrinsic to gold that we took it for granted, because gold it's a 10-pound lump of something. And if you get slugged in the head with it, nobody had to explain that science and physics mattered. And then science and engineering kind of became like quasi-irrelevant in the fiat world. Everybody just kind of, they ignored science and engineering, and there were no immediate clear consequences. There were just the hyperinflations and the collapses of those fiat systems. But because they abandoned gold and there was no digital money, the only alternative to one fiat, the Weimar Republic fiat currency, was the pound, and that alternative, was an alternative to the next thing and the next thing. So we were comparing fiat currencies or fiat monies to each other. And so there was no real need to embrace science and engineering. And Bitcoin is this paradigm shift where we have digital money crashing into, I guess, what we'll call an analog money, or maybe a political money is a better way to describe it. And of course, the highest form of money is the gold. So let's say it's called the gold standard. But what's the problem with the gold standard? I mean, it never worked that well, because it's got a couple of some crippling flaws and just some nagging flaws. There's inflation. Inflation's a nagging defect. It doesn't inflate fast. It's like it inflates slow, but it inflates at 2 or 3% a year. And because it's inflating, because you're mining more gold and you're striking more coins or whatever it is you're moving around, it's not conservative. And by that, I mean, it's not mathematically conservative, or it's not conservative from a scientific point of view. You start with 100 units, and then you've got 102 units, and then 105 units, and 108 units. So whatever percentage of the gold supply you have is leaking at 2 to 3% a year. And if it gets, and it could be worse if it's not a closed system. So if anybody introduces new gold into the system, like, when the Spaniards found the Inca gold, or they brought back the gold from the New World, you get a massive inflation. I think I remember reading a history of Caesar, where when he came back after the Gallic Wars, he had seized so much gold that created a hyperinflation in Rome, and the interest rates leaped. And there was just too much money. And so either there's inflation because you seized gold, or another nation flooded your market with gold, or there's inflation because the gold mining process continues. And so against our ideal model of money, that means that gold's not mathematically correct. It's not conservative, nor is it correct. It's an approximation. Under the best of circumstances, it's got a 2% error a year. And so over the course of a decade, the best of circumstances is like a 20-25% error rate.
Yeah.
But the worst of circumstances is I double or triple the amount of gold when I come back from, sacking the Aztecs or the Incas, or I sacked Gaul and I just brought back all this gold. And so then you've just got a massive error. So gold is mathematically erroneous because you're just shuffling metallic tokens, and it's not a closed system. I mean, the second problem with gold is confiscation, right? Because it's physical. The custodial rights of gold aren't really, they're not great. I guess they're a little bit better. They're a little bit better than fiat currency, but in some ways they're not as good. If I have a lot of gold, if I have $1 million worth of gold or $10 million worth of gold, it's heavy, really heavy. I can't get it through an airport. You know, I don't even know, like, you know, I went online on Amazon once a few years ago, and I wanted a little pocket knife. And I ordered this pocket knife. You know how pretty much you can only carry a blade, which is like, I don't know, half an inch long, or it was, what's the number? It's like some infinitesimally small size blade, like a 1/4 inch or half an inch blade. So I went on Amazon and I found someone advertising this really super small, dinky little knife that you could use to cut a string with. And it was advertised as being a TSA friendly, compliant, little pocket knife. And I was so proud of myself because I must have paid like $39 for it. And then I took it to the airport to go through the metal detector. And I swear that the TSA agent stopped, I put all this stuff through. They stopped the luggage. They're like, show me that. And they pulled out this little, 1/2 inch blade to slice a string with. I'm like, sir, you can't take this with you. And I thought, I can't, of course, the defense of Amazon said it's okay. It didn't really fly. Right. And the point of the story is you can't even slip a needle-like metal blade through an airport. I wonder if you could carry 5 gold coins and get away with it, or 10 gold coins if you can't get my little penknife thing through. And so the answer is it's easy to confiscate. Custodial rights are really weak. So the fundamental problem with the gold standard is the custody is difficult, and the security is hyper expensive. And by hyper expensive, it's, how much does it cost to secure $1 billion worth of this stuff? That ends my thoughts on gold. It's basically a metallic token, and it was our best idea, but it seems to have stopped working thousands of years ago. You could say 2,000 years ago, almost certainly they had shared ledgers, and they just used gold as a method of final settlement. And we know that it failed at different points. We know that it was debased and resulted in the collapse of the Roman Empire. And so if Rome was the greatest empire on earth, when their final settlement network failed, then the empire collapsed. And what you have is just a history is the endless succession of successive empires rising up with a new gold standard that was not debased. And then generation after generation, the coinage of that next empire, the successor empire, would be debased. And then that empire would fail and collapse. And then another empire would come along, and they would start the cycle over and over again. And yet the myth of gold as immutable money, right, or the sovereign store of value, it stayed with us for thousands of years into the 20th century. I would say that the gold standard has been dying a slow death, a death by 1,000 cuts.